If you're over 60 and you've got cash tucked away at home in a drawer, a safe, an envelope behind the canned goods, maybe a coffee can in the closet, I need you to stay with me for the next few minutes because what I'm about to tell you could be the difference between keeping every dollar you've saved and losing a chunk of it without ever seeing it coming. Here's the uncomfortable truth nobody at your bank is going to sit you down and explain. The money you keep at home isn't as safe as you think it is, not because of burglars, not because of fire, although those matter too. The real danger is quieter than that. It's the danger that when something goes wrong, when a relative finds it, when an emergency forces you to move it, when you finally try to put it back into the system, that pile of cash can suddenly become a problem instead of a protection. It can vanish in a way you can't prove. It can trigger questions you're not prepared to answer. And in some cases, it can put you in the crosshairs of rules you never even knew existed. My name is Henry, and on the Henry Wealth Blueprint, my whole job is to pull back the curtain on the financial traps that quietly take money from good, careful people. The people who did everything right, who saved instead of spent, who trusted that being cautious would keep them safe. And today I'm going to walk you through exactly why keeping large amounts of cash at home in 2026 carries risks most seniors have never been warned about, and more importantly, what you should actually do about it before it's too late. I'm going to give you 5 hard realities. Each one is more important than the last, and by the time we get to the 5th, you're going to understand something about cash that completely changes how you protect it. So don't click away. Because the mistake most people make isn't keeping cash. It's keeping it the wrong way, in the wrong amount, with no plan for what happens next. Let's start with the first reality, and it's the one almost nobody talks about. Cash at home has no record, none. And in a world that runs on records, that's not freedom, that's exposure. Think about it. Every dollar in your bank account has a trail. There's a statement, a deposit history, a paper record that says this money is yours and here's where it came from. Cash in a drawer has none of that. It's just paper. And paper can disappear. And when it does, there's nothing. No statement to point to. No transaction to dispute. No way to prove how much was ever there in the first place. Now here's where it gets serious. Imagine you've got $20,000 at home and one day it's gone. Maybe a caregiver took it, maybe a relative helped themselves, maybe a so-called handyman noticed where you kept it. You go to the police and the very first question they ask is like, how much was there and can you prove it? And you can't. There's no record, there's no proof. There's nothing but your word, and your word, sadly, doesn't recover a single dollar. The people who target seniors know this. They know cash at home is invisible money, and invisible money is the easiest money in the world to steal because the victim can't even prove the crime happened. That's the first crack in the foundation. But the second one is bigger, and it has to do with something nobody warns you about until it's far too late. What happens to that cash when you're gone or when you can no longer manage it yourself? Here's the situation. Let's say something happens. A stroke, a fall, a sudden illness, the kind of thing that lands a person in the hospital and then into the care of family. Now your loved ones are managing your affairs. And here's the problem. They don't know about the cash. Or worse, they know it exists but have no idea how much. So either the money sits hidden and is eventually lost forever, thrown out with old papers, donated inside a piece of furniture, never found at all, or it surfaces in a way that creates suspicion and conflict. I've seen families torn apart over discovered cash. One sibling finds $8,000 in a parent's closet, and suddenly everyone's accusing everyone else of taking some. Was there 10,000? Was there 5? Nobody knows because there's no record, and now the grief is wrapped up in suspicion. And if the estate goes through probate, undocumented cash creates a real mess, because legally that money is part of the estate, but there's no way to account for it. And that can raise questions with the probate court, and even with the tax authorities about where it came from and why it was never reported. So that's 2 strikes against home cash. No proof if it's stolen. Chaos if you can't manage it yourself. But the third reality is the one that catches the most honest, careful people completely off guard. And it's the one that can actually get you in trouble with the government. It's what happens when you finally try to put that cash back into the bank. Here's what most seniors don't understand. The moment you walk into a bank and deposit $10,000 or more in cash, the bank is legally required to file a report with the federal government. It's called a currency transaction report, and it's been the law for decades under the Bank Secrecy Act. Now, that report by itself is completely normal. It does not mean you did anything wrong. Millions of these are filed every year for totally legitimate reasons. But here's the trap, and it's a trap that has destroyed honest people. Let's say you've got, $15,000 saved up at home over the years, and you've heard, maybe from a friend, maybe from something you read, that depositing 10,000 or more flags you. So you think you're being smart. You decide to deposit it in pieces, 9,000 this week, 6,000 next week. Or you make a few deposits of 3 or 4,000 spread out over a month because you figure smaller amounts look less suspicious. That, my friend, is a federal crime. It's called structuring, and it doesn't matter one bit that the money was honestly earned and completely yours. The crime isn't having the cash. The crime is deliberately breaking up your deposits to stay under the reporting threshold. The government doesn't have to prove the money was dirty. They only have to prove you broke it up to avoid the report, and the penalties are severe. We're talking seized accounts, forced legal battles, and in some documented cases, ordinary people losing their entire savings through civil forfeiture before they were ever even charged with anything. There was a case, and there have been many like it, of an elderly business owner who'd been depositing cash from a small operation in amounts just under the threshold, simply because that's how the cash came in. No fraud, no crime underneath it, but the pattern alone triggered a seizure of tens of thousands of dollars, and it took a public outcry and a long legal fight to get any of it back. Read that again because it should stop you cold. The money was legal. The owner was innocent. The pattern was enough. So if you've got cash at home right now and you're thinking about depositing it, do not break it into pieces to avoid attention. That's the worst thing you can do. We'll come back to exactly what you should do instead. But first, I have to tell you about the fourth reality, because this is the one that quietly eats your money, even if nothing dramatic ever happens at all. No theft, no emergency, no government, just time. Cash at home loses value every single year, and right now it's losing it faster than most seniors realize. Here's what I mean. A dollar bill in a drawer is frozen in time. It says $1 and it'll always say $1, but the world around it doesn't stand still. The cost of groceries, of gas, of medicine, of everything you buy, that keeps climbing. So that $20,000 you've got carefully hidden away, in real terms, in what it can actually buy, it shrinks a little more every year. After several years of the kind of price increases we've been living through, that $20,000 might only buy you what $16,000 or $17,000 used to. You didn't lose the cash. You lost the purchasing power, which is the only thing that ever really mattered. And meanwhile, that same money, if it were sitting in a safe, insured place, even a basic high-yield savings account, could be earning interest. With rates where they've been recently, $20,000 could be quietly generating $800, $900, even $1,000 a year without you lifting a finger. So the cash in your drawer isn't just standing still. It's falling behind in two directions at once. It's losing value to rising prices, and it's losing the growth it could have been earning. Over a 10 or 15-year retirement, that gap can add up to thousands and thousands of dollars, money that simply evaporated because it was sitting in a coffee can instead of working for you. Now, I know what some of you are thinking because I hear it all the time. Henry, I don't trust the banks. I want my money where I can put my hands on it. I lived through hard times and I want cash, period. And I want you to know, I hear you, and that instinct is not foolish. There is real value in having some cash you can access immediately. I'm not going to tell you to put every dollar into the system and feel helpless. That would be bad advice. But that brings us to the fifth reality, and this is where everything we've talked about comes together. This is the part I most want you to remember, because the answer was never all cash, and it was never no cash. The answer is knowing the right amount in the right place with the right plan. And almost nobody has thought it through. So let me give you the actual blueprint. Here's what careful, smart seniors do with cash, and here's how you protect yourself from every single trap we just covered. First, decide on a sensible emergency amount to keep at home and keep it modest. For most people, somewhere in the range of a few hundred to $1,000 in small bills is plenty. enough to handle a power outage, a storm that knocks out the card readers, an emergency where you can't get to a bank for a day or two. That's the purpose of home cash. It's a short-term bridge, not a long-term vault. Keeping tens of thousands at home doesn't make you more secure. It makes you a bigger target and exposes you to every risk we discussed. Second, if you've got large amounts of cash at home right now, get it into a safe, insured account. But do it the right way. Do not break it up to avoid the reporting threshold. Just deposit it honestly. If it's 10,000 or more and the bank files a report, let them. That report is routine, it's legal, and it protects you because now there's a clean, documented trail showing exactly where your money is and that you came by it honestly. If you're nervous about it, here's a simple step. Tell the teller plainly, "I've been keeping this saved at home and I'd like to deposit it now." Honesty, on the record, is your best shield. If the amount is very large and you want extra peace of mind, a quick conversation with a tax professional first never hurts. Third, make your money visible to the people who'd need to know. This is the step almost everyone skips, and it causes the most heartache. Make sure at least one person you trust completely knows what you have and where it is. Better yet, get it documented, written down, included in your estate planning, so that if something happens to you, there's no mystery, no suspicion, no family war over a hidden envelope. Money that's documented and accounted for can be passed to the people you love. Money that's hidden and undocumented often just disappears. Fourth, once your savings are in the bank, don't let those accounts go silent. Here's a little-known trap that catches careful savers all the time. If an account sits with no activity for a stretch of time, often somewhere between 1 and 3 years depending on your state, the bank can be required to hand that money over to the state as unclaimed property. And in recent years, many banks have gotten stricter about what counts as activity. Automatic interest landing in the account may not be enough. So once a year, log in or call in and make a small manual transaction. Move $20 in, move it back out, something you personally initiate. That tiny act keeps the account alive and keeps your money from quietly slipping into a state government claims process that takes months of paperwork to reverse. And fifth, spread things out a little. Don't keep everything in one single place, whether that's one drawer at home or one account at one bank. A backup banking relationship at a second institution, even a credit union, means that if one account ever gets frozen, flagged, or tangled up in a review, you're not completely cut off from your own money. This isn't paranoia. It's the same logic that made you save in the first place. You prepare so that no single failure can take you down. Now let me bring this all together because I want you to walk away with this clear in your mind. Keeping a fortune in cash at home feels safe, but it's a feeling, not a fact. Cash at home has no record, so if it's stolen, you can't prove it ever existed. It creates confusion and conflict for your family if you can no longer manage it yourself. It can pull you into a federal structuring problem the moment you try to deposit it the wrong way. It quietly loses value every year to rising prices while earning you nothing, and it sits there exposed to fire, flood, and theft with no insurance behind it. None of this means you did anything wrong by saving cash, just the opposite. Saving is exactly what you were supposed to do. The mistake isn't the saving. The mistake is leaving that hard-earned money in a form that's invisible, undocumented, shrinking, and unprotected when a few simple steps could make it safe, accountable, and even growing. So here's what I want you to actually do starting today. Count what you've got at home and be honest with yourself about whether it's an emergency reserve or a hidden vault. Keep the modest emergency amount and make a plan to safely and honestly deposit the rest. Tell someone you trust where things stand and get it written down. Keep your accounts active once a year and give yourself a backup so no single freeze or failure can lock you out of your own life savings. Because the danger was never just a burglar at the window. Sometimes the danger is a rule you never heard of, a deposit pattern you didn't understand, a hidden envelope nobody else knew about, or simply the slow, silent erosion of money that should have been working for you. And by the time most people realize it, the cash is already gone, already shrunk, or already tangled in a mess that takes a year to fix. Don't wait for that moment. You have time right now, today, to fix this while it's still easy. The people who act early are the ones who keep what they built. The people who wait are the ones who find out the hard way. If this opened your eyes even a little, do me one favor, share it with someone who keeps cash at home. A parent, a neighbor, a friend from church, anyone over 60 who's still got money tucked away where they think it's safe. One conversation today could save them a fortune tomorrow. And if you want more straight talk like this on protecting everything you've spent a lifetime building, subscribe and stick with me here, because looking out for your money is exactly why this channel exists. I'll see you in the next one.